All right, folks, welcome back. We have the economic calendar for today, and we have 8:30 a.m. foreign securities purchases and Empire State Manufacturing Index. So Canadian dollar and dollar-based news is due out here in about 12 minutes or so. And tonight we have 9:30 Aussie. Overnight in the London session, we have a pretty busy calendar for cable. I'll talk about cable in a moment regarding what it may or may not do. I think the focus should be on euro for now, but let's go over to the charts. All right, first and foremost, we're looking at the dollar index, and we have the 95.50 level, which is the lowest close in this swing low in here. I like that. It's a mid-figure number too. So if you go up to 95.50, that should offer some resistance. It's also approximately the low of this candle, which is a bearish order block. It comes in at 95.48. And this small little candle here has a low of 95.43. So I like the 50 level. If it hits that level, we should see some measure of resistance, then expansion down into 94.45, which we've been looking for a while. I think we'll run through 94.45, but we're just looking for this level initially. Again, we're looking for some measure of capitulation. In other words, a lot of this type of action here. Real big down close candles, maybe a series of them. I'm looking for that. If we get that, then we're going to be near a intermediate term low for the dollar. Right now, it's just stair-stepping lower and lower and lower. That means it's not got wildly bearish yet. So even though sentiment may be growing into an extreme for bearishness for the dollar index, we have logical levels that still haven't been met yet. So until they're met and we see capitulation, and again, capitulation is a rational overreaction to the trend, and then you get a lot of big downside movement. Market makers like to use all that to get to extreme targets. All right, so euro. This is what I think is going on this week. We obviously have a big move that's transpired in the cable, and euro is going to want to try to close some of that ground up. And right now, we're sitting at a level where it makes sense to expect expansion. So just so you guys, I'm going to be going long 1 mini, and I'm going to put the stop at 114.40. And take profit. Get this little booger out of my way here. 116.50 is the weekly high. I'd like to be able to get off at that. So for now, we'll set it at that. A little bit of a swing objective. Okay, so we're inside the bullish order block in here. We're at consolidation as well. Right there's the weekly high I'm noting. So I think we'll see one more drive up, looking for that level. Ultimately, I think and believe that we have this area right over here, longer term, if we see the continuation of the dollar erosion. Let's go back into an intraday chart. We're going to an hourly. Okay, so the stop's going to have to be down here. It looks extended here on 1 hour chart. We're looking at price action on 4 hour. We're inside the order block. We're sitting at the top of the last down close candles open. So we can see expansion up here. 114.92 is the first initial objective. We don't want to see that price barrier broken and then rejected quickly. That's not what we want to see. We want to see it get through that and then show legs. In other words, momentum to go through that and get really caffeinated. In other words, a big green bar, and start creating series of them. So that way you leave this block of price action. Because we had these really nice lows in here taken out last week, rejected. So we're inside this consolidation right in here. We're in this block of price action near the high end, but the momentum and all the premium arrays are still open for trading. All the discount arrays below the equal lows, bullish order blocks, okay, the breaker right in here, all of them have been traded too. So now we're looking for expansion to leave this consolidation on the upside. So stops in a nice little area. It shouldn't come back down to there at all. We've already had the breaker traded to here, and we're below this up candle's close. That's good. Okay, so we have order block mean threshold here on the 15-minute time frame, which also overlays with the down close high on this candle. So what is that? Come on, work with me here. 114.63. So 114.60 can be retraded to and still be okay. We have fair value gap down here as well. It may need to touch this one more time, this 30-minute order block. I don't think it needs to, but personally, if we can go down these levels, I'm not going to be scared out of the trade. We're going to be looking for expansion above this high here. And again, that comes in at 14.78. So again, we're waiting for euro to catch up to what's already transpired on cable. Which takes us over to cable now. Cable on an hourly chart, we have, actually let's go to it daily first. Okay, so we have these old highs in here. I elected to use the 30.45 versus the high of 30.54. I think they'll try to get closer to the body of the candle, but it may not get to the body of the candle on this one here. So I'm using like the midway point between the wicks and this this close coming in at 130.39 or thereabouts. So 30.45 is my level. If it trades down to that level, it could come in with support. Ultimately, if we go below that, we're going to be looking back as a retest of this high, which I'd rather see it not do that. I'd like to see it leave that gap open, because then it can act as a breakaway gap, or like we have a gap here on the first stage of the price rally, second stage of the price rally. This could be another measuring gap. So that means we could take whatever that move is from here to this high, whatever forms, and leaving this gap open. We can project that up, and it gives us like really nice projections on the upside. And we'll do more of that should we trade higher up to 31.40, which is the next upside objective. Right there. Okay. And dollar CAD. Take a look at that real quick. We have fair value gap, old low back here, premium array, fair value gap right in here. So we may see it trade up to this level, blow out overnight stops, and then hopefully see it try to make a run below this low here. If we trade higher through fair value gap, I don't like this as a gap because we have this wick. So if we go above here, they're probably going to want to take the buy stops above this high here. right there. So 2750s buy stops, they would be in jeopardy above this high here. I'm sorry, above this fair value gap. But I think we'll see a run down below the lows here in about 2 minutes or so on the news. Dollar. Yeah, but I'd like to see it spike up, hit that 50 level, and then reject it hard and come back down and start moving towards the 94.45. I don't want to see 94.45 traded to today because that's the setup I want for the week. So that'll give me the fuel for the swing trade on the euro dollar, and it'll give me intraday day trading ideas that I can use on other foreign currency pairs. Namely one of like the Aussie dollar. And let's see, let's just keep our focus on dollar CAD this morning. I'm going to be with you till about 8:45 this morning, and that'll be it. I want to have my lessons for this month delivered to you by this Saturday, so I'm going to have the third and fourth one to you. That way I can get ahead of August's administrative side of things, because it's a lot of stuff I got to make sure is handled. And a lot of times satisfactions are what hold people up, or hold me up really. So if I get the content to you a little bit earlier, there shouldn't be any reason why I can't get it all handled before the end of the month, and then we're squared away for August, because August is a busy month. Every day there's something being taught, and we also have the PDFs that we break down for all the approaches that I teach for the assets. Let's go into a 15-minute time frame. Okay, we have an order block. In here. Right there. Okay, so 8:30, news embargoes should be lifting, so there should be some measure of volatility in here now. And as you can see, the volatility we're seeing here is a hallmark of crouching tiger, sleeping candlestick. Not a lot of volatility yet, huh? $14.40 is the stop loss on the euro. And it's a swing trade, it's not a day trade. So I'm not worried about babysitting it because the target's way up there. Okay. I don't know if it's going to be the low of the week for Euromat. I just knew that we're at a level where we could see euro expand from where we're at. And if it comes back a little bit, I think it'll be a short, shallow retracement in the levels I just mentioned a minute ago. nothing that would scare me out of the trade. So that's what I'm saying. I'm not even going to pay attention to the euro. I had the position on. I'm just going to let it go, and I'll pay more attention to other pairs this week. And that's pretty much how I do my trading. I don't want to, once I have an idea, I just do it and it's done. I'm going to try to do a little bit of my personal style of trading in August, which means there won't be a lot of setups, but hopefully they'll have the setup that moves the market for the week. So we'll have all the content at our disposal, so that way I have a lot more liberty to be able to speak about things that I've been leaving gaps in, so that we just do it. Mondays are traditionally a consolidation day where they run to the early session high, early week high or low, or set the groundwork for that to be retraded through and rejected on Tuesday's London Open. How do I determine when you think a liquidity void or fair value gap will not fill back in? When all the other asset classes or pairs start moving in a direction that would be contrary to what you would expect to see fill. So again, our focus isn't always just looking at one thing. We're not looking at one tree in the forest. We're looking at the overall risk on or risk off scenario. So by having a framework of looking at the majors, I don't like to trade the Swissy, but I still refer to it, as you'll see in the top-down approach. We have to look at them all to get a general consensus on what the market's doing. Because admittedly, if you look at one pair like I've done in the past, and you focus just primarily on that, trying to be just a specialist, you can see something that is a complete distortion of what the overall picture is, which is really the basis of what SMT is. Because if you're just looking at one thing, it could be going higher up to a level that makes perfect sense to that one pair, but then it doesn't go to your target, it fails because you're just looking at one element of the overall market. So by looking at all the asset classes, and when we're dealing specifically with Forex, when we look at the majors collectively, that's how you get the understanding of whether or not a fair value gap will fill or not. Because if, for instance, for that fair value gap on the dollar CAD to fill, that implies that the dollar should rally and all foreign currencies should either be held in consolidation or drop. If we're not seeing signs of that, then this will remain open. Does that answer your question? It just requires a little bit of work to go through all the other asset classes and pairs. The swing target for euro is 16.15 up here. It's 145 pips away. Have I dreamed of being a billionaire? Yeah, when I was a younger guy. All right, so euro, not euro, cable showing some initial desire to want to rally. Yeah, 100 million, I'm done. Never touching another market again. You're right. As long as there's breath in these lungs, I'll probably be trading everything still. That's the problem. When you get when you hit an objective or you hit a goal, it's like, okay, well, I'm done, and you can't leave it alone. Well, hello there, little girl. You trying to make a cameo? Hmm? All right, let's go into a 15-minute time frame, $1. Again, remember, it's Monday, so we're not expecting a lot of movement. Come on. There we go. We had a nice big move on Friday. We had the weekend to let other people figure out what they want to do and chase it. And then this is the day where everyone gets frustrated because they want to see the continuation of what was seen on Friday. And if it does continue, and we trade down through Sunday's low here on the dollar, that could signal a continuation and expansion lower, but many times it could just go down below that and return back to the range and really drive you nuts. So again, it's another reason why Mondays, I tend to not be too excited about them and leave Monday's trading to whoever else wants to get in there. Because if the weekly range is going to expand one direction over the other, if it's, for instance, if it's going to be bullish for Euro, there's going to be opportunities to be long in the London session on Tuesday, the New York session on Tuesday. Even if we don't get a deep retracement, you can always buy on strength and up buying on a stop. There's no reason to feel rushed ever. Mondays, like I said, I'm willing to leave that on the table for whoever else wants to be aggressive. Is there a problem if I start a signal service? No. I actually encourage some of you to do that because it'll get you a lot of capital right away. It'll be really short order for you to get money to do that. The only thing I'm asking you all collectively is not to teach the things that you've been taught. Don't go into detail about the analysis. Don't say, well, I think it's going to go here because see if this candle does this and does that. That's teaching. I don't want you teaching it. If I wanted it to be mainstream, I'd be doing it on YouTube, but I don't. So, and besides, if you do that, your customer base will eventually learn enough and they'll leave. If you're going to try a business model like that, signal services is the best, especially because there's always new individuals coming in and you'll have an endless supply of new customers. Even if folks come in and they're not enamored by your results, or if they're not feeling they need to do it anymore because they think they figured it out, they'll leave. Signal services, in my opinion, is the easiest way to generate a lot of money real quick, and it's an endless flow. It just keeps going and going and going as long as you want to keep doing it. And you can do it in a capacity like I run this mentorship. You want to do it in a demo set and let everybody talk about you. Let them run their mouths, okay? Because really, they just don't want to pay you, and they want you to do it for nothing. That's all it is. They try to goat you into doing it because that's what these people do on social media now. They all want me to return back to doing it for free. And I had no problem doing it for free until other people started taking my stuff and selling it and using my name to draw people to them. Like, we sat down together and I gave them special insights and they can now sell my stuff. That's the reason why I became a business. Otherwise, I've been doing it for 20 years for free. But no, I don't have a problem with you doing a signal service. And like I said, it's a good business model to get you some money right away because some of you don't have a whole lot to trade with, and you've invested pretty much everything you got right now to learn it. And this way, you get a real quick bang for your buck for your insights, And you can do it in a way where you don't even need a lot of people to do very well with it. I just don't want people sitting down with charts on YouTube and saying, here's what this is going to happen if it does this and does that. That's teaching, man. And if you do that, I guarantee you, you are wasting your time doing that. If you're going to do anything with the information apart from trading your own money and you need to raise up capital, obviously trade a small account and do very well with it with low drawdown, and then get investors to go behind you. If that's not your cup of tea, then just do a signal service. But teaching is not the way to do it, because number one, you're giving it away, and you're not going to get a longevity with your business model for income, because ultimately when people learn what they think they needed to learn, they leave. So if you need like 6 months or a year or 18 months of generated capital to build up an equity base you can start working off of to retire, then you don't want to be, and certainly you don't want to be teaching, because I don't want you teaching it. That's the agreement we had. Okay, but there's a couple of YouTube channels that are still going, and they're still teaching. Some of it's teaching my free content. But if you notice, all my free content has been removed because I don't even want it being talked about. I don't want none of that stuff being done. But if you're going to do that, it's better just to say, this is the level I think it's going to go to, and I think it's going to go to this level, and let the audience be mystified by it. I did it for years like that. And believe me, you want to get an attention, do it like that. If you do these long-winded rants about what you think is going to happen in the analysis, number one, you're teaching by default. Two, when you're wrong, they remember that. Believe me, they remember it. Versus if you show them a level and you think it's going to trade to that level, you're letting the audience build in all of the internals, what led you to that level. Sometimes they'll be right, sometimes they'll be wrong. Even if they don't trade on the effect of what you see in the marketplace, the sheer curiosity alone will keep them drawn to you for your picks, your levels, your calls, your trade calls. So no, you don't have a problem with me if you do signals. That means buy here, sell here, stop here, target here, scale out, all that. But going into a chart and saying, see this pattern here, and this is what's going to happen here, and this, that, the other thing, number one, that's a waste of your time. Unless you're like me, where I just simply love doing it, and I had to be doing it because where I live at, there's people that don't trade, but they have money, and they're snobbies. Like, I don't like being around them. My wife wants to be a social butterfly with these people. I don't care for them because they're fake. But I did it because I could talk to people that were in the trading community, and I found it interesting. Cable's routing just a little bit more. If some buy stops right above here. Where are we at here? Just pop up here. So we have 31 buy stops. If we get through that, we have equal highs up here that we can run through. Euro looks like it wants to snag its Sunday weekly high. And dollar CAD still treading water. But anyway, back to the business stuff that you guys can do with this. Obviously, managing funds, very, very stressful in my opinion, but some of you are built to do it, and I would never discourage you not to do it if that's what you want to do, because you can make a ton of money like that, tons of money in really, really short order, much more than a signal service. Signal service allows flexibility. Managed funds, they want their money working all the time. And signal services, you kind of like dictate when you're going to do something. And if you're not teaching them, which is the ideal scenario, because I don't want to be doing anything against anyone in here because of breach of contract. But if you teach the things in this mentorship, number one, you're not Robin Hood. Okay? You're going to feel cool, like, yeah, I gave it to the world. Okay? But really what you're doing is you're giving one of the strongest edges away. And only thing you've done is gave someone else the opportunity to take the material and sell it and make a profit for themselves, where you have the insight, you paid for it, enjoy it. Because I've been sitting on it for years. And literally, it's everything that every trader wants to know, but they won't get it from anything else. And some of the folks that left, you know, they think they figured out something, or they think that, you know, it's not as good as it lived up to be, because they have no idea what they're doing. But they're the same people that if I put a YouTube video up, they'd be in there watching it, even if it was 4 hours long. How would you get people to subscribe to your Signal service? Ben, that's all Monday's teaching in the August content. I actually tell you how to do that whole thing. I actually give you a complete business model for setting up your own fund, setting up your own Signal service, your own, like if you want to get a group of traders together to pool your money together, there's a teaching I'm going to discuss that about. You can do that. There's a lot of different things you can do, but they're all individual discussions in August. The way I get around doing licensing, like CTA, like Commodity Trade Advisor, you have to become, and you have to obviously really win the trust of the investor. So you can't just be like a flash in the pan type person. Like you can't show like here's 6 months that I've been doing on a demo account. It's going to be real hard to get people to do that. But there's a way to get around having to get that license. So far, CAD's been lethargic, hasn't done too much at all. We haven't seen any movement whatsoever. Cable, still sleeping a little bit. Euro, again, like I said, we want to see price trade through this high and show a willingness to want to expand. Okay, and the idea is we want to see the market move higher and try to catch up with the ground that's been gained by the cable. Again, they're not always going to move in tandem, but when we have a large displacement in one currency, they're going to draw the other currency up to fill in that gap between the two. Okay. All right, so why not use a larger position on a euro position? Not important, because it's not a big enough position for me to worry about, and I'm just showing you a swing target. If you guys can do whatever you want in your own, I'm just showing you a point of entry, the reasons why I think it's going to go up there, and where the stop would be. And you know how much the stop is in terms of distance and range. So if you're going to be risking 1.5% of your account, then you can do the math on that. The target is, again, 116.15, 145 pips. And again, it's a swing trade. It's not a day trade. It's not a one-shot well and kill either. It's I'm holding on to it with the expectation we'll leave this range and run for that level. And I'm not wanting to be babysitting it. Okay. All right. So that's going to be it for this morning. I know it's not a whole lot, but the markets aren't really giving us much to work off of. I gave you an entry for euro as a swing, gave you your stop, gave you your target, and if we get other entry points, we can add more on that position. So I can add another single at a higher level if we get another bullish scenario. Okay. This is the last question I'm going to do for Escape. Just to grow a small account, do you think it's obvious to take more risk? No. Right there, no. Absolutely do not need to take more risk. You want to take less risk. The less risk is the better scenario, because you can start with a very small position and build it up as price builds in more equity in your trade. You can build that into your trade position, and that's why it's important to be trading on higher time frame charts. Even though we look at lower time frame, higher time frame charts, you can build big positions over time just starting with a small shoestring budget. In the course of a year to 18 months, there's no reason why you can't take a $5,000 account to now you're self-employed as a trader. And I mean that wholeheartedly. But it takes a lot of work. And I mean a lot of work, a lot of focus. You cannot be playing fantasy football and more analysis. No, real quick, let's go back over to the economic calendar and just get a preview of what's going on for this week, see if there's any highlights. All right, so yeah, this is tomorrow. For London, We might get some movement on euro, but I'm not convinced it's going to be directional with all this, especially having seen it move like we've seen it on one side. And then we have the Carney speaking at 9:30. Equities opening tomorrow in London. I'm sorry, New York. On Wednesday, we have, this should be good for our New York session. So Wednesday, New York, will probably look to trade the Canadian dollar. Now, notice I didn't say I'm promising, because I had a guy want to insist that I promised that we're going to take a trade. This looks like it's a favorable condition for Canadian. We have a lot of news for dollar, and then we have one medium impact for Canadian. So that's a good primer for a move in the New York session at 8:30 on Wednesday. Plus, we have crude oil inventories later on, so they're probably going to be very busy with Canadian dollar on Wednesday. Employment change, so Wednesday night in the Asian session, that might be impactful. So we'll be looking to get live in a live session around 9 o'clock on Wednesday night, which will be your Thursday morning in Aussie land. And on Thursday, I don't think there's anything in, Thursday we won't be doing anything on Thursday. So we won't be doing any live analysis, so we'll just do, I'll come up with something for Thursday. And then on Friday, a lot of news for Canadian dollar, so they'll probably have all kinds of volatility for that. So I'm not sure we'll have a setup, but we'll certainly be watching this live over Canadian dollar live charts. And that's going to be it for today. I'm going to wish you all have a nice afternoon, relax, take the rest of the day off, just study. And I'm going to do my best to get these last two sessions for your teachings this month done. And we'll try to have that wrapped up for the month this Saturday at 9 o'clock. We'll still have stuff to teach, obviously, daily next week, but I want to get the lessons out of the way. Until then, 8:15 tomorrow. Wish good luck and good trading.